Hey, what's up, guys? In this video, I am going to I'm going to do a market recap of my trading on Monday, November 20th. I'm going to kind of talk about a little bit about the technicals, but most of this video is going to be talking about trading psychology. Um, I'm going to show you my executions. I'm going to show you my trading journal, and this isn't going to look good for me. Um, so I want to put that out there. I think an emotional trading day for me. It was a loss. It wasn't a big loss day, but I these are the it's days like this when I I'm not proud of my trading, usually when I get emotional. And I think, when you see my executions and I show you my journal, you're gonna see why I have certain rules on this channel that I'm trying to promote. And I'm just going to talk about, why. You're going to see uh, a real live example of why it's important to follow your rules and, what improvement looks like to get towards profitability. So I will start off by just kind of talking about the technicals. Now, again, remember, this is Monday, November 20th. So there was no major news this day. This wasn't live streamed. I recorded it, but it wasn't live streamed. And I thought about posting the recording, but it's really long, and I was thinking about, doing a market review, kind of narrating the recording, but I just thought it was too much to try and sift through, and it'd be a little faster and more worth your time if I did it, just didn't re-watch the trading session. But I'm going to show you the executions. So we opened the morning, and as you can see, this was Monday of a new week. We had this new week opening gap, and prior to 9:30, at the 9:30 open, we had an aggressive run away from the new week opening gap. Now, something ICT has taught is how quickly we move from the new week opening gap is very indicative of the day. So if we have an open that kind of comes up but then comes back and then comes up and then touches it again, it wants to hang around that new week opening gap. But we have this open, and as you can see, we launch up away from the new week opening gap. You can see here on the higher time frame, there wasn't much of like a liquidity sweep below. It would have been nice if we got below these lows right here, but we didn't. Check NASDAQ. NASDAQ didn't either. It just left those lows intact. We ran up, swept this buy side. As you know, in this channel, we trade the 2023 model within this 9:30 to 10 window. So if we had swept one of these lows, even on the 5-minute, that could have been enough for us to take a trade. But since we didn't, I would have liked a more significant run below a 5-minute or a 15-minute low. We have a swing low right here in the 5-minute, but that wasn't really significant enough. But if we broke one of these lows and then reversed, market structure shifted, I would have loved to enter on a 2022 model. But okay, but since it didn't sweep those lows, we didn't enter. I didn't enter. Coming up, you can see we made these fair value gaps. We entered one here, came up, and right at this point right here, you can see in the 5-minute, we took this level of buy side. So I'll put that buy side. And something that I think's been really important in these past trading months is to really identify how price behaves when we take liquidity. Um, that will be, I'm going to touch more on that later. But see how fast we ran to this immediate high right here? And then once we took that, you can see we kind of consolidated. And we had this other high. So remember, we're talking about Monday. This was the Friday high of the day. So, which is also a daily high. So this is Friday daily high. Remember, we're expecting higher prices. So, I said this last week in last week's weekly review. about how on the daily time frame, I'm not going to switch these charts because since we're a few days back, if I change the time frames, it'll reset to today, Wednesday, and then I'll have to scrub backwards. So to avoid that, I'm just try and follow along with me mentally here. This on the daily chart is a high. I've been telling you in the weekly reviews we are expecting to take out the highs, where quarterly shift is bullish now, and we have all these higher time frame highs that we are targeting. So this was a high that peaked right above those highs, and I said we're going to look for something something to go higher over them. So you can see we consolidated here in the 1 minute and then ran a little, it's not a bad consolidation, and then we ran aggressively for that Friday daily high. You can see on the 5 minute we only had one down close candle before taking that high. You can see here, so remember, bullish market structure. Down close candles support upwards price. So you can see we have these down close candles. We come up, down close. The wicks, we have these even wicks, but look at the bodies. The bodies respect this low. We have no market structure shift here. We have a run up above these down close candles. We come down, looks like we use this one as support. We're using these down close candles as support. Make a swing high with the bodies. Come down. Even the wicks don't really get too low. And we run up into the 10 o'clock hour. Now, into the 10 o'clock hour, we've already taken this is a daily high. So that's a very significant form of liquidity. And what you'll see is, and this is going to be more relevant as we come into these holiday periods, it was especially relevant today, Wednesday, November 22nd. And I'm going to do a market review of this morning where you're going to be able to see this very clearly, how the algorithm runs for these pools of liquidity and then stops. So your it's not smart to get into trades after that. Your best trades are going to be targeting these obvious pools of liquidity that ICT teaches, which are London highs, previous day highs. So we take that previous day high. You can see us kind of stall out, and on the 5 minute we are right here. So imagine you didn't see all of this. You only saw this run up. We swept this higher time frame liquidity. Now, I'm going to turn on my executions, and what you're going to see here is the importance of not trying to pick a top. So let me give you some context. So we're going to kind of shift this discussion right now into a little more of a psychology talk. So when I was trading this was Monday. If you've watched some of my previous videos, this weekend I was traveling home for the holidays. I landed like Friday of last week, and I spent Saturday and Sunday running around, catching up with friends. It was a lot of running around, going from one thing to another, catching up with friends. Sunday night, I was, out until like 11 with friends. Didn't get home until 11:30, and went to bed late. I'm somebody who needs a lot of sleep. I work out. I'm very active. Sleeps, my body requires a lot of rest. And I woke up early because I like to wake up early to get my mind right for the market. And then I was just so exhausted, I went back to bed. Woke up at about 5:30. Too tired to wake up. Went back to bed. Then, 9:20 comes around. Market's about to open, and I'm finally like kind of awake. And I just pull my laptop over, and first thing I do is look at the market. Not a smart thing to do. So in my normal routine, I'm up about 2 hours before the market opens. I'm awake. I have coffee in me. Been awake for a while, so I can go into the market prepared for basically psychological battle. Trading is your higher self fighting your lower self. And what I mean by that is your higher self is the one who's patient, disciplined, and can wait and doesn't get emotional. Your lower self is the one that gets emotional. They let, they feel fear, they feel greed, um, all those buzzwords that you hear in the trading community, discipline and stuff like that. But it's true. And if you're tired, this is specific, I'm more talking about myself right here. Specifically me, if I'm tired, like if I stayed up late, I feel like trading culture can be very synonymous with, that grind hustle culture, which is like waking up early, going to bed late. For me personally, that doesn't work with trading. If I am tired, it is very hard for me to stay disciplined. I need to get a lot of sleep because the more tired I am, I've noticed the more emotional I get in trading. And I think that's pretty obvious to say, but if you are struggling with emotions in trading, you need to make sure you are well rested every time you sit down in front of the charts. Think about it in other aspects. If you had a terrible night's sleep, say you didn't sleep at all, and you're a parent, and you wake up to get your kid ready for school, and they're screaming their head off and acting a fool, your fuse is going to be very short, and it's going to be really hard for you, to hold back, maybe yelling, or it's just going to be hard emotionally. Um, Say you didn't sleep at all last night, and you have roommates, and your roommates have a bunch of people over, and they're being loud, and it's going to be really hard for you to have a level head. So again, you can't be tired when you're trading, and you have to be fully awake, or else those bad emotions that stop us from being successful as traders are going to take over. You have to fight those emotions when you are well rested. So not being well rested, you're setting yourself up for failure. So I say all that to say this, I was out of my normal routine. I was in a new place, didn't have my normal setup, and I thought I was like, I'm good at trading. I can just wake up, turn the market on and trade. Not true. So I'll show you my executions here. I overtraded a lot, and what you're going to see is I really had trouble. I tried to pick a top. For some reason, I thought I wanted to try and play down to this new week opening gap. I wasn't really reading the market structure that well. I saw that we took this daily level of liquidity and just thought, oh, we took this higher time frame liquidity. I'm going to, and then saw it kind of, pause. We had this shift on the 1 minute again. That's why I tell you guys a lot, I want to wait for 5 minute confirmation, because all this really was a pullback on the 5 minute. And if you look at the 15 minute, it was also just a pullback on the 15 minute. Yes. So, and another reason why I would really have wanted these lows to be swept, because then we could have had treated this as a breaker structure. We could have found some kind of structure in here. If you swept these lows, we took liquidity and wanted to go higher. I think if we swept these lows, I would have been less convinced that we were going lower. But since we had these lows in play, we've been in a choppy market. With the holiday coming around, I thought we were going to come back to this new week opening gap, but we didn't. I should have identified how aggressively we moved away from it, and how in the previous, all last week, look how range bound we were. We were very range bound last week. So we opened this week and move aggressively away from the new week opening gap. It wants to move. So you can see here, I sold 2 contracts going short off this fair value gap right here. Got stopped out when it came up here. And then I basically was having this battle of, between these 2 fair value gaps, when really I was over analyzing this 1 minute chart and not looking at the higher time frame. And remember, if you stay in line with your higher time frame order flow, you will be successful. That will just increase your win rate a lot more, because it's in line with higher time frame narratives. So I think, prior, even last week, guys heard me say a few times, I'm not interested in shorts. If it goes below this point, I'm not interested in shorts. I only want to take longs because our weekly outlook video was we're looking for longs. And here I'm caught trying to take shorts and it gets pushed against me. Now imagine if I had gone long off of this as an inversion, we would have successfully found the silver bullet. But I thought, we were going lower, and I was wrong about that. And another thing too is you can see all these trades in here, and when you start over trading like this, it makes it harder for you to not double second guess yourself. So that's why, in my opinion, reducing the amount of trades you have is really important because you want to really just wait for the right moment and not get caught up. The more trades you take, the more emotional it is. So that was the morning. It resulted in a pretty big loss. Come the afternoon, let me scroll over. I basically did the same thing. In the afternoon, though, I was able to kind of try and go into it with a little more. Oh, you know what? I played NASDAQ in the afternoon. Anyways, the same thing happened in the afternoon, and I did walk away recouping some of the loss that I made, I believe. Well, I'm going to show you the journal right now. So here's my journal so far. We'll do a more in-depth breakdown of the month of November when the month closes out. But something I want to point out to you is look at how November started off. Look at this week. Decent week. This was a loss, and yes, so I didn't want to point this red because this was a negative 40 day, and I think I made a video on the channel, but we actually had a winning trade that day, and TradingView just didn't trigger the take profit, and when that happened, I kind of just moved my stop to break even, and it came back up and hit the stop, but it was 2 ticks over our take profit level, so I didn't want to put that red. I kept the number legit, but I didn't want to keep it red because in my mind, we got that win based off the technical difficulty. The number is negative 40, but I didn't want to put it red as well. Anyways, look at this good week. Then we have decent size loss, nothing big, recouped half of it back. This next week, didn't really take many trades, CPI. Then we have this. So this right here, it's not a huge loss, but it's the fact that look at the size of 2 of these red days and compared to our green days. These are the days where it's not trading. Again, I say this a lot. This is my personal belief, but I think a lot of more successful traders would agree with this. Trading is avoiding losing days because the winning days will come. So now I'm going to go over to the specific day of that Monday, and these were the trades that were taken. So again, on this channel, the rules are only 3 trades per day. That's why it looks like this in my journal. We have these 3 slots because I'm only allowed to take 3 trades a day. And another good rule, I don't have this rule personally, a lot of people do, and I think it's a decent rule. I just don't think could be for me. I think that a lot of people have max loss days. They hold themselves like I can only lose $500 today. I think that's a great rule because it gives you a limit when you have to stop and put the charts away. Because if you continue, your trading is emotional. And as you can see right here, this is very emotional trading. You can see I did have this 265 win in the afternoon on NASDAQ, and there was one other green trade in here where, if I ended up exiting out because a lot of these trades was me just like being like, I shouldn't be in this trade anymore. I'm just getting out. And then I go back to the charts. And there was one trade in here where if I just had actually let it go to terminus, we would have recouped a decent amount. It would have been another large win. But, I was having that internal conflict of I shouldn't be trading right now. Like I was up a little bit, but let me just get out of this. I'm not supposed to be doing this. And you have that back and forth argument. So basically, these are the days where you have to avoiding days like these at all costs, because these are days where you blow your account. And I'm at the point where I didn't blow the account, and I haven't blown an account in a long time. Although I haven't blown an account in a long time, it doesn't mean I don't have days like these. And when I was blowing accounts, it was these, but just larger numbers, because what I would be doing is I'd be down X amount, and I'd say I'll just put more contracts on, and then I needed to move less to win back that. And the quickest, if this is the formula for blowing accounts, it's when you're losing, adding more contracts or taking more trades. If you are down on the day and you are putting on more contracts or taking more trades, that is the formula. Those are the variables in the formula that equals blown account. So we didn't get that here, and it's been a while. Again, it's been a while since I've blown an account, but again, these days, what they do is they take away your wins. And we can have a pretty high win rate on this channel, but days like this are what's going to be making it take longer to get to our end goal. And I'm comfortable sharing this with you because, if you've been watching this channel for a while, you have seen me trade. You know that most of the time I am very almost robotic with the trades. I set the limit, I let it hit it, and then it'll, like our winning trades are just, it'll usually, we'll enter the trade, it goes 5 handles, and we exit, and it's boom, 5 handles, we exit, 5 handles, we exit. So I'm comfortable sharing this with you because I am proud of my discipline in trading and where that's at now. And I'm sharing it at my own expense to show you that, like, you're not alone, and you really just have to keep continuing until, like, these become less and less frequent. And identify, you need to have rules that kind of show you, like, to stop you. So whether that is a max loss limit of $500 or X, whatever amount that makes sense for your account size. Mine is 3 trades. So mine is 3 trades because I feel like I can, if I win one trade, let me trade another trade. But if I lose 2 out of the 3, usually I should stop. And after 3 trades, then it's just like any trading after that is just trying to win back losses. So yeah, so wanted to show you guys this at my own expense. You know, and I wanted to show you this to kind of give a little insight to how I'm going to move forward in the rest of this month, because if we go back to my master sheet, so holiday weekend, short week, I'm not going to be trading Wednesday, Thursday, Friday. Didn't trade Wednesday. We have 1 week left, and we are currently at negative 138 for the month. So we're just about at break even. Honestly, I will be trading next week, but this is one of those periods where you have to zoom out and view things in the context of months at a time, because we had a great month last month. How much are we going to dig into these profits? Um, Having a month where you end negative 138, that's not bad. You're going to have losing months every now and then. I think we'll probably end this month positive. I think I'll be able to at least get one trade next week. I think we'll be able to trade next week. But zoom out and understand where you're at. It's probably good that we're on a holiday week right now, because if I started off a normal week like this, it would be an emotional end of the week, we'd have to be like fighting back, trying to win this back. But now what would happen is I'm going to get 3 days plus the weekend to clear my head. We can come back next week fresh and focused. Um, as you can see, we've had 3 losing days and 6 winning days. So again, the odds are on our sides. We are consistent in having green days. We just have to submit to the process, submit to time, zoom out a little, and understand that this is trading's a constant battle with yourself. It's constantly showing up every day as your higher self. It's not a one day like you have this enlightened aha moment and then you start making thousands of dollars. It is a constant chipping away and making sure your higher self is just in control. And there are days when you can lose that. No matter, I mean, I'm sure in the next 5 years, there's going to be days where I still kind of overtrade and take a big loss. So again, yeah, I think what profitability is it's doing this long enough until, your technicals get good enough. And then when you get good enough at reading the charts, it's basically an emotional fight at that point. Again, I think I take pride in identifying the the market structure and the draws and liquidity, and I think that's my strong suit. Is kind of the analyst in me is my strong is like my strengths. But again, we are humans, we are emotional beings, and it is going to take a lot longer to master that human element, the trader. That's when it is, I made a video talking about the difference between the analyst and the trader. And the analyst, if you're a smart person, you can kind of understand these concepts pretty quickly and memorize them pretty quickly. But then just because you understand that doesn't mean you're going to be making money, because then the trader comes into the scene. And the trader is a whole other animal that is emotional. It's the human element of us, and it takes a lot longer to train that. So, I say all that to say this is where we're at in the month, and this doesn't mean that we can't close out the month green and we can't close out the month strong. And yeah, I thought this would be a good video to kind of, showcase some of the real sides of trading. Kind of talk through my mindset, because something like this, that number isn't too bad, but let me go back. Like a day like this can really feel like you're taking a few steps back. But remember to just zoom out. Look where we are at on the month. And we have a whole week to close out the month. I will be doing a more technical market review about today's price action on November 22nd. That will be posted a little bit later today. And hope you found some of this insightful.